Good morning, everybody. This is James Bennett, Global Equity Analyst at Anchor Capital. Just a quick review on Tesla after its results last week. The share was a fantastic performer last year, up about 63% after a slow start to the year. In keeping with a lot of other big tech companies, it's had a little bit of a softer start to 2025. The share price is a very divisive call. Some people either absolutely love Tesla or they don't like it at all. I think the point we would make here is that this is in keeping with the CEO and founder, Elon Musk. These kind of maverick individuals, often we start off liking a lot of the things that they do. And then, of course, as time goes by, they also end up saying and doing some things we don't like so much. The point I always make is that this is kind of the package deal we get when we invest in Tesla. There's been some criticism at Tesla in the last year or so that their models were starting to look a little bit dated. I think that's fair, but I certainly think this refreshed Model Y, which, by the way, is the biggest selling model in the world that's coming out this year, might go some way to allaying those concerns. The financial Q4 24 results themselves weren't great. I would always make the point, though, that Tesla is not really about the last quarter of the financial results. It's a very futuristic share, and the market doesn't really dwell too much on the most recent financial results. Tesla's market share has been stagnating a little bit over the last year or so in the total vehicle market, but perhaps with the release of this new Model Y, we could see their market share start to tick up a little bit again. The point always with Tesla is that it's not just a pure EV play. There's a lot of optionality in this business. So there's a wide range of divisions that you have to value when you look at this company for the longer term. Just one small example of this is the energy storage business. I mean, here's a business of theirs that was nowhere a couple of years ago and has now suddenly grown tenfold over the last 2.5 years. Tesla Robotaxi, this has been spoken about quite a bit for the last few years. It definitely feels like we're getting a little bit closer, even though their timeline of starting in June this year may be a little bit optimistic, but there's no doubt that this is starting to come closer. Obviously, a big two-way competition between Tesla and Waymo. It's just worth bearing in mind that Tesla is trying to solve a much bigger problem here than Waymo actually are. Waymo's kind of a small geofence solution for inner city ride hail, whereas Tesla are trying with their full self-driving to come up with a system where your car looks like a normal family car and pretty much drive anywhere in the world. Full self-driving is no doubt statistically safer than human driving. Tesla have a lot of compelling data to actually support that claim. The problem here is that in the court of public opinion, one autonomous death seems to count a lot more than where it's as a result of a human-induced accident. Humanoid robots, another very exciting part for Tesla in the coming years. None of the analysts in the market are really putting a value on this at the moment, but on kind of a 5 to 10 year view, that could be very exciting as well. Tesla's got a nice AI theme as well. They probably got one of the top 5 biggest supercomputers in the world these days, and they're using that to train their full self-driving system. Whether Tesla is a buy or a sell is somewhat controversial. It's one of those companies, because it's so futuristic, you can easily make a case for the share being very undervalued or overvalued. A lot of it just depends on what sort of mindset you go into when you try and value this business. Final point with Tesla, we would say it hasn't been a great stock to short other than for some trading opportunities here and there. So it's one of those shares we would say if you don't like it, probably rather just sit on the sidelines, but it certainly is a business that does have a lot of long-term optionality. Thank you very much.